Wildcat strikes at South African mines are now in their sixth week, and the unrest is starting to spook investors. For his thoughts, I'm joined from Johannesburg by Gold Fields CEO Nick Holland. Good to see you again, Nick. What signals are you getting from investors and indeed from shareholders that they are bothered by this now?
There's a great deal of concern from the investor base internationally in particular, and they're looking for updates on a regular basis. What's happening? Is this symptomatic of a bigger issue that's going to impact the industry? When could we see an end to it? What is the likely outcome of it all? Those are the sort of questions that we're getting at the moment.
Yeah, and is it symptomatic of a bigger issue in the industry as far as you're concerned?
Well, it's difficult to say at this stage, but there's a number of operations that have been impacted, as you've indicated, over a certain period of time. There's been the issue raised of the question of salaries and wages, which you've heard. In some cases, there's been issue raised about the leadership in the trade unions on the particular operations. Those are some of the themes, but it's difficult to know whether this is a destabilization of the industry or not. It's hard to predict.
Can you give us an update of what's going on at KDC West? What are the demands, the specific demands now being made, and are you prepared to meet them?
Well, we've had demands around wages, a minimum wage of 12,500. We've had demands that employees don't want to pay taxes on their bonus, which I think none of us would like to pay taxes on our bonus if we could avoid it. That's obviously not up to us. They want to pay less taxes on their salaries. So if you look at these demands, how realistic are they? And when those kind of demands are being put, you have to question the validity of these demands. Clearly, at this stage, we're not going to entertain any of that. We have a 2-year wage deal that expires on the 30th of June next year. And as far as I'm concerned, that's it. We can start a negotiation early next year on the wages, but the wage deal is through to June next year.
Yep. And
that's where we stand at this stage.
My understanding is costing about 1,400 ounces a day in lost output, KDC West. What is the hit for the company in terms of revenue? How much has it cost you so far, and how much longer could you viably go on like this?
Oh, we could go on for quite some time. We're a very strong company financially. This could go on for a long, long time before we had a major impact. Of course, it's not a financial issue that concerns us as much as it does a safety issue, in that we've got blasted stopes underground that have not been fully supported. We would like to be able to make safe at least, and we're not able to do so. Safety being the most important priority. And that is particularly concerning when we've got an illegal strike here, and with safety being the most important value in the company. That is the concern we have at the moment.
Nick, this is not about an industry unable to pay higher wages to these workers, right?
We can pay higher wages, but I think we have to remember that consistently over the last decade, we've paid above inflation wage increases year after year. On average, we've been paying around about 9 to 10%, and over the same period, inflation has probably been about 3% lower. And if you look at the annuity effect of all of that, between then and now, it's already a significant impact on the company. So one has to look also at the drop in productivity we've seen on the South African gold mines as they've got deeper, and the grade decline as well, the Eskom increases that we've seen over the last 3 or 4 years, and that together with additional carbon taxes, royalties. There's a lot that's been imposed on the industry, and the question is, could we pay more? Probably we could, but not a lot more than what we are paying now.
You're not going to blink first?
No, look, I think at this stage we have to remember it's an illegal strike, and I think people must come back to work, and we can try and get around a table and see if there's a sensible dialogue we can have with all stakeholders. If we can try and do that, we can listen to what concerns are that people have, and we can try and address some of those issues. I think it's very difficult to negotiate in a situation where we have an illegal strike.
Back to the bigger picture, Nick. Could this boost investment growth in mining assets outside of South Africa?
Well, it could. And if one looks at the strategies, certainly of most of the South African producers, they are diversifying out of South Africa. And that is driven not only by the higher cost base that we've seen over the years, but also by the fact that you have to go where the gold is. And there's still a lot of gold in South Africa, in the Wits Basin, as we call it, but it's fairly deep. And it's going to take new technology, we believe, to be able to safely mine deeper gold resources. We're all working on new technology to be able to access these gold reserves at depth. But there's still some way to go before we got something that's economically viable.
But my point is that this unrest will probably boost investment growth outside of South Africa. Could that be a catalyst for that boost?
No, I don't think it's happened already. You know, it's already being driven by a need to look for where the gold deposits are. Clearly, if we can resolve this issue in South Africa, and we can actually get to terms and come to a long-term agreement with all stakeholders, there's still value to be got out of South African mining for all stakeholders. But we can't leave it too long, because the longer we wait, it's going to be more difficult for the assets to be able to deliver the value. So the diversification was happening already.
All right, Nick, many thanks for talking with Reuters today. Nick Holland, the CEO of Gold Fields. That's it from me for now. Plenty more ahead on Reuters Insider. I'm Axel Threlfall. This is Reuters.